Okay, good afternoon. Here's our polling results. That looks great. We have a lot of people who have either received their funds or have been allocated and are waiting to receive their funds. And we will definitely look at some of those other topics in coming webinars. So thank you for your input. All right, good afternoon. Welcome to our Business Owner Advisory webinar. This is our fourth webinar, and our goal each week is to provide up-to-date and timely info to help our small business owners navigate and manage their business during this crazy time. If you are new or weren't able to join us over the last 3 weeks, our discussions have covered topics centered around relief for small business owners. So on the 8th of April, we talked about the Paycheck Protection Program and filing for that loan. So there were a few people in the polling that have not yet filed, so I'd recommend that as a good webinar. Then on the 15th, we covered a recap on the PPP and also dove into some of the tax updates in the CARES Act. And then last week, we began our discussions on how the forgiveness aspect of the PPP loan works. And today, we're going to dive into more about the ins and outs of the PPP loan forgiveness. And we will also walk through version 1 of our Canopy 360 loan forgiveness calculator. I'm hopeful that we can get through today's presentations without any glitches, because I think last week we had a lot of questions from the audience and we didn't get a chance to address those. So I'm hopeful that we'll get through today without any glitches. To be respectful of your time and also to allow time for those questions at the end, I will stop promptly at 1:30 and then we can turn it over to answering your questions. Just as a reminder, you can use the Q&A button at the bottom to ask questions, and my teammate Becca will be monitoring those during the chat. If for any reason we're unable to get to all the questions, or there's a question that we need to look into, don't worry, we'll follow up with you in the coming days, and it will ensure that all your questions are answered. We do plan on continuing this webinar into the future, and so we will have one again next week on Wednesday at 1 p.m. And you will also get a copy of today's webinar, the video and the slides emailed to you sometime tomorrow. If you find today helpful, we encourage you to share the replay with your friends or small business owners that you think might benefit. And we also welcome you to invite any small business owners to future webinars. So my name's Russell Lindsay. I went to the University of Florida. I'm a CPA and I'm one of the partners here at Canopy 360. And we have a team of 28 of us that love to help advise small business owners on advanced strategies on the subjects of accounting, tax planning, management consulting, and wealth management. So like I said a minute ago, we talked a lot about the Paycheck Protection Program these last 3 weeks. If you missed any of these webinars, there are replay links on our firm Facebook page, on our website, and also on YouTube. To find them, simply type in Canopy 360 and they should pop up on YouTube if you search Canopy 360. Or if you go to our website at canopy360.com, there is a COVID-19 page and you'll find all of our webinars and also a lot of helpful frequently asked questions there. If you're new to the PPP or a beginner and haven't applied yet, this webinar is part 4 in our series. I definitely recommend you watch the previous webinars if you haven't had a chance. And I mean, trust me when I say we've heard from a lot of very successful business owners that have told us they think it is worth the investment of their time to sit through and listen to these. And I'd especially emphasize this for those of you who are in the boat of having received or planning to receive those funds, because we're going through how to spend those funds appropriately and how to maximize your forgiveness. So on to PPP loan forgiveness. Once you've received your funds, the clock starts ticking on your 8-week measurement period. And looking at the 8-week measurement period, the amount you pay out for your approved costs determines your maximum forgiveness. So the question of the week so far this week has been, how do I calculate my forgiveness? And so what we're going to do is we're going to go through and start with payroll costs for wages, salaries, commissions, tips, severance pay, and then we're going to add mortgage interest and interest on any other debt that you had in place before February 15th, 2020. That is, the debt needs to be registered to the same name, the same business name as the business that applied for the PPP loan. Then you're going to add rent under a lease agreement that was signed and enforced prior to February 15th, 2020. And I think it's important to point out that this also includes rent paid for leased equipment. Then you're going to add utilities for electricity, gas, water, telephone, and internet. And one little thing I want to point out is on the rent, and I mentioned this last week, is we lease copiers. So we've got a few copier leases that we're able to include in there. So I would ask and mention that you'll want to look out for any leased equipment that you use where you have a lease agreement that was in place prior to February 15th. After you figure out your total approved costs, then you'll know the amount of your maximum potential loan forgiveness. And then that's where you then have to consider any potential employee headcount reduction. The question you're trying to answer here is, did your employee headcount decline? So what's important here, you'll need to start with figuring out your beginning employee headcount, or what is called your baseline period FTE headcount. How many full-time equivalent employees did you have for both of these periods in the baseline? And then you'll compare the baseline full-time equivalent amount to your full-time equivalent number during your 8-week measurement period. And we will go specifically through this when we show you our calculator. But in the case where your full-time equivalents decreased by 10%, this means that your loan forgiveness will also be reduced proportionally by that same 10%. And then there's another step. We're still figuring this part out as it relates to the salary and wage reduction. And this is not included in version 1 of our calculator. We received so many requests for the calculator this week. Felt like everybody was getting a little antsy. So we went ahead and said, let's get version 1 of the calculator out to you guys so you can start using it and planning ahead and figuring things out. For now, as it relates to the salary and wage reduction, what you need to know here is you want to watch out for the situation when you have an employee where their average weekly pay dropped by more than 25% during the measurement period from what it previously was. So we're also looking into guidance on what we'll call the FTE headcount fix. So that's where if by, let's say you did have a drop in headcount, if by June 30th you bring your full-time equivalent levels back up to where they were at February 15th, then you might be able to avoid the reduction for this FTE headcount reduction. So in the coming weeks, when we get further guidance on the salary and wage reduction aspect, and also on this FTE headcount fix, we will update our calculator when we do, and we'll have a version 2. I am hopeful you'll find our calculator to be a good tool for your business. So let's recap on how to utilize our Canopy 360 PPP loan forgiveness calculator, and we'll use the calculator as an example. So let me switch over and I'll share the calculator at this point. All right, Becca, is it showing the calculator?
Yes.
All right, great. All right, so this is version 1 of our PPP loan forgiveness calculator. So I want to walk you through it. You'll see here in the note that the only thing you have to focus on are the yellow boxes. So step 1 is you will enter into this box how much you received for your PPP loan. Once you do that, it will automatically calculate the portion that must be used for payroll to get forgiveness. So as we've mentioned in previous webinars, at least 75% of your loan has to be used on payroll costs. And so we have outlined right here what those payroll costs are. And then up to 25% of the loan can be used for non-payroll items. So that just gives you a quick view on the amounts that must be used for payroll. And some people have asked, can the whole amount be used for payroll? Absolutely. You can use the whole loan for payroll, but it must be at least 75%. So that's step 1, is to enter in the PPP loan amount received. Step 2 is you're going to enter in payroll for your pay period for each employee. Again, you're going to only enter in the boxes that are highlighted. So you will list out each of your employees. And for this example, we're dealing with a weekly pay. So we'll enter in the pay for each employee. When we get to Jennifer Smith is the owner. And so Jennifer makes, let's just say Jennifer makes $150,000 a year. So we're entering in the weekly payroll. So we'll enter in 150,000 over 52 weeks. So her weekly pay is $28.84. So it will automatically fill in your payroll cost. These boxes are white, so you're not going to do anything here. Then what you're going to do is you're going to see, are there any employees that make over 100,000? So in the case for Jennifer, that she makes over 100,000 and they are weekly, what we're going to do here is we're going to enter in 100,000 over 52 weeks. And what that'll do is that'll say, even though her pay is $28.84 per week, she is capped at a weekly average of $100,000. So now we have the payroll portion of it. Next, what we will do is we will enter in any employer paid health insurance for each employee. And we will also enter in any employer paid retirement plan contributions. And lastly, on payroll, you're going to enter in the state unemployment tax that you paid for that pay period. So that will complete step 2. When we send this, we expect to send this calculator out to you guys by the end of Friday. We're going to put a little bit of formatting on this. So we will have a calculator set up if you're weekly payroll. We'll have a calculator set up if you're bi-weekly payroll, and we'll have a calculator set up if you're bi-monthly payroll. So we will make sure when we send you the calculator that it's formatted for whatever your pay period is. So after step 2, after we've entered in all the payroll, we're going to also enter in our other approved costs. So I have already pre-filled this information in just to save time. But what we'll do is we will enter in the dates of the bill for rent. So in this case, we're going to put in our May 1st rent. And we will enter in the amount of the rent. We'll enter in what we paid for our copier lease or any other equipment. We'll also put in the date of the bill for the copier lease. Then we'll enter in our electric, water, telephone, and internet, and any interest we paid on any credit line or mortgage. That will give us our total other approved costs. That completes step 3. And then I think the important thing is the full-time equivalent calculations. So there are a few segments here that we have to figure out. First, we have to look at the 2 periods for our baseline period full-time equivalent headcount. So we're going to look at the period of time from February 15th through June 30th. And we're going to enter in the total hours for payroll for each week. Once we enter that total in, that will automatically calculate that that's a total of 3,100 hours divided by those 20 weeks. Will calculate that we have 4 FTEs. We'll then do the same total hour calculation for January and February of 2020. And we'll enter in our total hours. And you'll see here in this example, the full-time equivalents went down to 3. So this gives us the answer for what our baseline period full-time equivalent headcount is. So in this example, we're going to take the lower number. So we're going to use 3. So in this example, the baseline period FTE headcount is 3. Then what we're going to do is we're going to track our full-time equivalents during our 8-week measurement period. So what this is set up to do is you can basically put in the date that you received your PPP funds, watch these dates. What'll happen is when you put the enter in the date like this and you click enter, it'll automatically adjust these dates. So in the example of somebody who received their funds yesterday, their 8-week period goes to June 23rd. Then we're going to enter in the hours of payroll for each week. And those total hours of 1240 divided by 8 weeks is going to give us a full-time equivalent of 4. Once we've completed that, which is step 4, the loan forgiveness portion of this spreadsheet does all the calculations for us. So I'll walk you through that. So in this example where I entered in this week's payroll, obviously that's only 1 week. And for the measurement period, that's going to cover 8 weeks. So what I've set this up to do is if you enter in 1 week's worth of payroll, assuming that each week in the future, the payroll will be similar, it will take all of these amounts and it will multiply them by the 8 weeks. So it will show us that our total payroll or total health insurance, retirement benefits, and unemployment tax are a total of $52,000. It will add our rent and our copier lease. It will add that in there. In this example, this is for 1 month. So we would obviously expand this section and enter our rents and our utilities for June as well. And we'll have this spreadsheet built out so that it will automatically calculate. Then that will give us our tentative total forgivable expenses, both for payroll and for other costs. And then it will pull our measurement period full-time equivalents. It will also pull our 2 baseline full-time equivalent amounts, and it will do a calculation. This amount here, I don't believe this is adding to the amount of forgiveness. This is a glitch, so we'll fix this before we send it out to you. But nevertheless, what will happen with this calculator, just simple entering in information, it will automatically tell you if there's any balance of your loan that will not be forgiven. So in the example of if for some reason our FTEs were reduced, then in that example, it would take our expenses and we would have a full-time equivalent headcount reduction, and that would reduce the amount of the loan forgiven, and it would tell us of that loan, of what we've received, how much we should expect will have to be paid back. So like I said, this is version 1 of our calculator. We're trying to make it as easy as possible with what you have to enter in and make sure that it follows the guidelines that we have. And so we will most definitely share this with you all by the end of this week. And then we will also update it as we get more guidance. Let me just switch back over to the presentation real quick. All right, Becca, are we good on the presentation?
Yes.
All right, great. So, so we do recommend that you track your approved costs in great detail. Be sure you're calculating and tracking these to support your forgiveness amount. Keeping your receipts for all utilities, payment coupons for loan payments, get a copy of your lease agreements, and also saved your detailed payroll journal for each pay period during your 8-week measurement period. So how are we trying to help? What are your options? You can send us an email at info@canopy360.com to request your copy of the Canopy 360 loan forgiveness calculator. Simply tell us if your payroll period is weekly or biweekly or bi-monthly. Just say, hey, send me the weekly calculator or send me the bi-weekly calculator, and we will send that to you by the end of this week. We do anticipate that this calculator will be updated and changed over time, so stay tuned for the next version to ensure you're always working with the most recent option. But we did hear you guys loud and clear that you wanted a copy of this, and so we're sending it out to you now, just so you can start looking forward. What if you simply just don't have time because you're too busy, or you just feel unsure or worried about getting the calculation incorrect, and you'd be more comfortable having us calculate and verify your forgiveness? That is okay. So what we're doing is we're offering a service to calculate PPP loan forgiveness. So what do you get? We'll start with a checklist of info. And so we'll send you the checklist of information. Then you can give us everything that is on the checklist, and we'll work on the calculations and also putting together the required documentation so that at the end of your 8-week measurement period, you'll have everything you need organized and ready to send to the bank so that you can get your loan forgiveness quickly and easily. Our fee for this service will be based on a percentage of your loan, and it will be tiered based on your pay period being weekly, bi-weekly, or bi-monthly, and also on the number of employees you have. So obviously, if you're weekly and you have a ton of employees, your fee is going to be tiered a little bit higher than if you're bi-weekly and you only have a few employees. So what you might ask, what are the next steps if you'd like to hire us to calculate your PPP loan forgiveness? Send an email to John Golden and Tanner Emmons, and one of them will reach out to you to start the process of getting you set up for us to help you calculate your loan forgiveness. So quickly, before we get to the 1:30, Congress did approve to replenish the PPP loan program funds and voted to add another 320 billion or so last Friday. Bankers did get the weekend off, and the SBA opened back up this Monday and started accepting PPP applications again. We've had several clients get allocated. The system was so overwhelmed on Monday, it crashed for some time, but we have had some clients get allocated, and we fully expect the second round of funds to be gone rather quickly. And we've seen the bankers hit their stride on processing the loans and getting the funds out. The one thing that was from last week that was a carryover was, will we have to reduce payroll costs by employer and employee tax withholdings? The good news is the answer is no. On the SBA website, there is an updated FAQ sheet, and it's as of yesterday. And question number 16 states that for purposes of the loan that may be forgiven, payroll costs are calculated on a gross basis. So we do not have to reduce payroll costs by employer or employee tax withholdings. So that's good news. We will follow up with you on the salary and wage reduction and the employee headcount fix, and we fully expect there will be another version of our calculator. And because it is 1:30, I want to stick to what I said. So that wraps up our discussion today. And so let's get to your questions. I want to encourage you to ask questions because your questions really help us plan for and provide the information that you want and need. So remember, if you have a question, click the Q&A at the bottom to submit your questions. So let's get started with the questions. Okay, so first question is, I got a deposit called EIDG. Is that my PPP payment or not? I applied for EIDL2. So, Mr. Bartling, I would say if you did not sign loan documents from your bank, it is very likely not your PPP payment. To get your PPP payment, you do have to sign loan documents. My guess is that is your EIDL loan. I heard that with this second distribution by Congress that the business has to show need. Is this true? And how do you show need? That's a real that's a really good question. I think what they're doing there, Dr. Choksi, is they are if you saw in the news, Ruth Chris got 20 million and then they're giving it back. And so there's a lot of big businesses that have received these loans. And so I think they're emphasizing that. I think for us small businesses who have all been affected with decreased patient or client interaction, had to close our doors if we're restaurants, if we're attorneys and the phone stopped ringing, we all obviously are going to be able to show need. I think this was more for those larger businesses that received the PPP funds, and they were pointing that out. But I don't think you'll have any issues showing a need. James, a business submitted for PPP with an amount that included 2 1099 contractors. The bank asked for a resubmission because that amount doesn't match what was on the 940 payroll return. The app was resubmitted at a lower amount, but ultimately the bank approved and funded the first larger amount. What is the best way to handle that overage? That's a really good question. I think perfect segue into our calculator. I think you can use the calculator, and I think what you're likely going to find that unless you hire more employees and pay out more wages and increase your full-time equivalents, that you are very likely going to have received more funds than will be forgiven. And so your options will be with that unforgivable amount is that you can either pay it back in a lump sum or in your loan documents. It will show you what your payment amounts are. And typically what we're seeing is those payments are starting 6 months after your receipt of those funds. And then you have 18 monthly payments. So I would say your options with that overage are to either pay it back in lump sum after you calculate and have the amount forgiven, or to hold on to that money and just pay back the loan over time. Debbie, please confirm that rent includes sales tax that might be charged. I got that question yesterday. That's a really good question. Becca, that's something that can you mark for us to verify if rent includes sales tax, please? I would think that just thinking about it intuitively, rent does include sales tax because that is part of the total amount of consideration that is due, but we will definitely verify that for you. I think it's safe to include sales tax, but we will most definitely verify it for you. All right, Mr. Bartling, can I pay myself if I am a sole proprietor filing Schedule C? So that's a good question. The amount of the forgiveness as it relates to a Schedule C is that's a really good question. To be honest with you, I need to look into the answer to that. I don't want to give you the wrong answer. So let me look into that of how you pay yourself as a Schedule C. Becca, if you'll add that, please. I just want to make sure that I get you the right answer, Mr. Bartling. So dates start after you receive the funds. That is correct. The day you receive the funds starts your 8-week measurement period. If we withheld paying rent in April for cash flow purposes and will pay it with proceeds from the loan along with May, can we get an additional month credit of rent if we pay 3 rent payments during the measurement period? That's a question that I've had a few times. John, thanks for that question. And I'm not 100% certain. When I think about it, I think about the fact that you had a lease in place prior to February 15th, which obligated you to pay April's rent. Because of COVID, you were unable to pay it due to cash flow. So I would think that we might be able to include those 3 rent payments. That is something else, Becca, that we need to verify, please, is are we limited to 2 rent payments? And I think also 2 utility payments, or if we hadn't paid those because of cash flow, can we add 3? So that'll be something that we'll verify in the future. Awesome. This is great. This is the fun part. I love these questions. Thank you for these questions. Brad, must the loan proceeds be paid out in full during the 8-week measurement period if the intent is to receive 100% loan forgiveness? The answer is yes. The approved costs for payroll and the approved costs for other expenses for rent, interest, and utilities all have to be spent during that 8-week period. James, we've opened a separate bank account for the funds as directed. Should our payroll service also be adjusted to pay payroll from there, or can we, quote unquote, reimburse ourselves from that secondary account? That's something that we've talked about quite frequently the last few days also. and I kind of explained it to somebody yesterday that you've got 2 types of businesses. You have the business that has their normal operating cash, and then they've got the separate account with PPP, and they have adequate funds in their operating account to pay for expenses. And then you've got other clients that were so adversely affected by this situation that they don't have the reserves. So those PPP funds are most, if not everything that they have. So I think it's going to be more of an accounting function of using this calculator to calculate all the costs that you're spending and back it up with receipts and then show it to the bank and let them have 60 days to approve the forgiveness. So in the instance of your question, I think you can most certainly have the payroll company deduct the funds out of that account. If you're having them deduct the funds, that payroll calculator, each pay period will will tell you how much of the funds they should be deducting. So in other words, if you had the payroll company deduct all the payroll costs out of that account, you're likely going to need to reimburse some of the taxes that are not included, the employer's side of the taxes. Or if you wanted to just keep, if you had enough money in, so I would say that's the example of a client that doesn't have adequate funds. They need to have payroll deducted out of the PPP funds. For the client that has adequate operating funds, I would think my recommendation would be to have the payroll deducted out of the regular account, use the spreadsheet to calculate how much of the payroll can be reimbursed with the PPP funds, and then just transfer the PPP funds from your PPP account to your operating and label it to reimburse for April 29th payroll period. And then that way you have a good tracking mechanism. Sorry about the long-winded answer on that one. Anonymous attendee, can I put my wife on payroll and help buffer any potential loss? So I definitely think that if you are looking to hire employees and pay them payroll and track their hours, then I definitely think that that is an approved cost. And so if your wife was working for you in your business, that would definitely be something that would count as an approved payroll. You'll just want to track the payroll dollars and the hours and the total hours in the spreadsheet. Hey, Dave, we terminated somebody on 3/20. However, we are posting for a new role. If we have that person hired by 6/20, should we be fine? So that's part A of your question. That, I think, is going to fall into the FTE headcount fix. And that's the thing that we don't have guidance on of how does that work? Because basically the way the law states is it says, if your FTEs declined, and the payroll calculator is set up to calculate that now. So it'll tell you that your payroll, your FTEs have, your head count has declined. What's not in this version of the calculator is how the fix works if you were to hire somebody by June 30th. So I don't yet have the answer to that question. I would anticipate that if you are able to increase your FTEs by that time, then you would be okay. But I don't know exactly how it works yet, so I'm waiting on that guidance. Your part B of your question is, do contractors count towards payroll? So contractors that you are paying with a 1099 do not count towards payroll. So only employees that are getting paid through payroll count. Marilyn, do we include holiday pay in payroll calculations? Yes, we do. Absolutely. So I think Memorial Day is coming up. If you typically pay for Memorial Day, absolutely, you include that in your calculations. If I had a new equipment loan last year, will the interest on that loan be able to be paid from the PPP? So as long as you purchase the equipment loan prior to February 15th of 2020, then you can absolutely count the interest on that equipment loan. Do payroll processing costs count in the 75% payroll cost portion of the loan forgiveness? For example, we use Paycor to process our payroll, and they charge per employee and per payroll. Would these fees be included in the total payroll amount? That's a really good question. I don't know the answer to that. Becca, will you add for us to find out if payroll costs count? My initial hunch on that is no, they don't. But we will certainly look into that and see if we find anything to the contrary. Going back to putting my wife on payroll, that would be to show another FTE. Correct. Absolutely. You are correct. You would be paying her, you would be tracking the hours in the payroll calculator in the measurement period FTE calculation. Her hours would count, and that would absolutely be to show another FTE. Hey, Paul, how are you, man? So is gas, diesel part of transportation? I don't think so. I think that that's all under the utilities portion of the approved costs. And I think that some utility bills have a transportation line item that it's a cost for the delivery of the electric. I don't believe it counts gas and payroll. If some of my employees on salary were paid less during March and April, can we repay them during this 8-week period so we can pay them back also? Let me think about that. That's an interesting question. So if they were paid less in March and April, I think the question becomes, when does your 8-week measurement period start? And I think you're going to look at the 8-week measurement period and you're going to say, what did I pay the employees during that period? And then you're going to compare it to the period before you received your PPP funds. And so any amount that's due for the period before you received your PPP funds would be factoring into, I believe, this wage and salary reduction thing that we're still waiting on guidance. And I don't think that it would negatively impact the 8-week period. So in other words, I think you're going to pay them whatever you're going to pay them during this 8-week period. And then that will be counted towards forgiveness. I don't know if I'm exactly answering your question though. So if I'm not, please ask a follow-up. Is the national paid leave included in the PPP calculations? You know what, Debbie, you're asking me, I don't even know what the national paid leave is. Okay, so that's part of the new FMLA where we were all required to provide up to 2 weeks of paid leave if somebody is unable to come to work because they're suffering from COVID or they are taking care of somebody that is suffering from COVID. And so the answer to your question, is any of that leave included in the PPP calculations? The answer is no. And the reason why it's not included is because as part of that leave, we're getting a tax credit to offset that cost. So if we were getting the tax credit and including it in PPP, we'd be double dipping, which I love to double dip, but in this event, we can't do it, unfortunately. All right, next question. We furloughed some employees. Do we have to rehire them at the beginning of the 8-week period? That's a good question. I was having a discussion with some business owners yesterday about that, and they're a restaurant, and I think this applies to dental offices too, where you may not be able to open your doors yet And so you are not required to rehire them. The two business owners that I were talking to were kind of taking opposite sides, and we were kind of having a discussion, if you will. One of them was saying, let's not rehire them and let's wait until we open up. And then when we open up, we'll start paying them. The other one was saying, let's go ahead and hire them now and let's pay them the money because that's what the intent of the PPP loan was for. So I think the answer to your question will really be based on your specifics. And what I would recommend is that you take the calculator that we're going to send out. You go through the steps in the video. Step 1, how much loan did you get? Step 2, what's your next week's payroll? Step 3, what are your other costs? And step 4, your FTE calculations. And then look back and see how much of the loan will be forgivable and how much will have to be paid back. And then go back into the payroll section and play with the numbers hypothetically if you were to rehire them back. And I think hopefully that'll give you the information you're looking for. It'll help you answer the question. All right, got about 8 minutes left. We have a few more questions. So I have not paid my employees for the last month. We will start working in 2 weeks. Can I pay them extra once they start working to make up for lost income and count that in my 8 weeks? This is a good question. I was having a discussion with a business owner yesterday about what we call quote unquote hazard pay. So we're paying them the regular rate plus we were paying them an additional amount for hazard pay because, you know, there's some HR aspects to your question that I'm not familiar with. So I think you can, as it relates to this law, you can definitely pay them hazard pay, pay them extra, change their hourly rate. But I think you need to be cautious from an HR standpoint. And I am not good at HR, so I don't know the laws on HR. But you can do it. I just don't know if there's any HR requirements. And I think if you did do it, you'd want to, either raise their rate and just agree to them that you're going to have an increased rate for a period of time, or add a separate line item for temporary hazard pay. I just don't know if you're setting a bad precedent with doing it that way. Like, when do you stop paying hazard pay? That's what you got to be thinking about. Is it up to each bank to determine if we meet the forgiveness? Is that who we will give our, yes. So we will, at the end of the 8-week measurement period, we will provide all of the information to the bank. Either you will, or if you end up hiring us to do it, we'll put together a whole package at the end of the 8-week period, turn it into them. Then the bank has 60 days to review all the information and then approve your forgiveness. They will then go to SBA. The SBA will approve what they have. The SBA will pay back the bank because the bank has loaned you their money. So the SBA will pay you back and your loan will be forgiven. Can we adjust the hourly pay rate for employees during the 8 weeks for employees and then return it to the lower level after the 8 weeks? I haven't seen anything that says you can't do this. Again, I think this is you're venturing into HR, but I mean, there's nothing to say that that in the normal course of business, you don't have a reduction in hourly rates sometimes. So um, there's nothing in the law that says in the PPP law that says you can't do this. But it's still an HR thing so I think you can do it for purposes of the PPP. I just don't know if there's an HR aspect to this that you need to consider, but you can definitely do it for the PPP loan. Can we pay bonuses during the 8 weeks? You can pay bonuses if they're in the normal course of your business, and it's normally it's normal for you to pay bonuses, or there's some business reason that you accomplished this, that you're earning a bonus, and that's normal in your business, then you can definitely pay bonuses. You can't just make up a bonus and not have any justification or reason for it. So you definitely want to make sure that you have I would anticipate that in applying for the forgiveness, you're going to have to explain the business purpose of the bonus. So I don't need to figure any of this out for the EIDG. I have not signed any PPP papers. So as far as I understand on the EIDL loan, the economic injury disaster loan, if you received 10,000 or less, what I understand is that is a grant and you do not have to figure anything out. All right, I don't see any other questions. We hope you found today helpful. We're happy to customize this webinar to your liking. And do you have any topics that you would like us to cover? If you do, please send those to info@canopy360.com. We're here to serve you, our valued small business clients. We hope to see you next Wednesday at 1 p.m. Sign up. Space is limited to the first 100 attendees. And thank you for joining us today.